Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. The most significant feature of this market in recent weeks has been the very significant lows of 2021 at 15,665, which led to lows of late November 2023 plus this year in January, February, and with some mild finessing, the lows of late July and early September at 15,840 and 15,600 zone. This support zone created the lows of late July, say at 15,600, early September at 15,665. It is at this point that I feel obliged once again to mention the big descending scallop pattern that's been going on about for months now, and what it may mean within the near-term universe. So the key level has been and is the lows at 15,840. A significant move below this, and by that I mean you would know it when you see it. A significant break below that level would give a potential downside for the descending scallop pattern in the 13,830 zone, which would not be too far away from the potential below for the old bearish half-hour hesitation seen over June and July, that eventually never materialized. It still all came down to what the market has done, and even now might still do, with that 15,840 zone. First time around in late July, prices chose to bounce back upwards, and during the start of August sustained the bounce, moving higher, slowly higher overall. However, over mid-August, prices had an issue with testing the June 2021 low at 17,095, and I suspect indirectly the overhead very slowly declining gold long moving average, which is currently at 17,295. This suspicion eventually evolved into a mid-July to early September ascending wedge pattern, highlighted in dark blue on my daily chart. Early 4 weeks ago, prices broke down through the now ascending wedge pattern, easily reaching the primary target and close enough to the secondary target down at the July low at 15,600, enough that I chose not to designate it. However, we then saw prices build upwards again, enough for me to draw a bright red late July to mid-September bullish Andrews pitchfork. I said on this 2 weeks ago, and I quote, "It is a nascent one, and I am quite prepared to retire it if it doesn't fit, especially if the support down at 15,600 being so close gives way. If it does, well, the next support is the November 2020 low at 14,935. However, better support is in between the congestion at 14,555 and the October 2020 low at 14,040. Though in truth, I am not sure how good this may be given the ammunition we have overhead." End of quote. Now, I continued, "The one other thing I would like to mention is that we might just form a possible double bottom over the action from July to date. It is way too early to really consider this, but keep it in the back of your mind in case the 15,600 July low holds prices up and we'll really start to see the beginnings of a pullback up." End of quote. Well, since then, the bright red bullish pitchfork, Andrews pitchfork, has held. Andrews pitchfork has held. We're now seeing prices moving up towards the upper time, currently at 17,195, pushing this week over both the gold long moving average and the mauve declining medium moving average. The medium moving average currently at 17,285, and up to test the October 2019 high at 17,815. Not only all of this, but the price rise has triggered the opportunity for the July to date double bottom. Thus, we have a primary target X in the 18,140 area and a secondary, harder to reach target X1 in the 18,665 area. In the way, bar the bright red Tyne and October 2019 high, is the July 22 high at 18,265. But the more interesting feature is around target X1, where we have not only the June high at 18,610, but the interesting 50% Fibonacci line of the big May to late July move at 18,680. Indeed, you could call this area a small congestion band at 18,610 to 18,680, and I'm very interested to see if we get up there what the market will do. LME 3-month zinc. This is a very busy and colourful chart, and for that I apologise, but all these patterns do relate to what is going on right now, so let me explain. Prices peaked this year at the neckline of the September to December 2022 reverse head and shoulders pattern, currently at 31 32.40 with a horn top in late May. Now remember this purple neckline as it will show up again. The market then moved back down, rejected by this neckline, reaching the primary and secondary targets for the horn top. But the decline became hesitant in mid-June, especially when it tested the interesting support, currently at 28.37, of the dark blue broken upper tine of the old May to August 2023 bullish shift pitchfork. That had acted back then as an August 23 to April 2024 upper bull channel line. It's quite old. I would normally have retired this broken pitchfork, but this pattern still resonates as recently as last month, which is only a day away. Anyway, I said 16 weeks ago, and I quote, "This is the first decent support we have seen, though I would not be surprised if prices do move further down near the middle time, currently at 26.72, end of quote. Well, prices did indeed drop down there, just below the middle time in early August, but this drop was not singular, rather it was part of a late July today small reverse head and shoulders pattern. 5 weeks ago we saw prices drive higher, not only over the neckline, currently at 29.905 of this pattern, but also over the June 2021 low at 28.10, the old dark blue upper tine, and the short medium moving average currently at 28.08, and the median moving average currently 28.70. This also countered quite strongly July's monthly key reversal down. Consequently, I laid out 3 weeks ago some potentials topside with a reverse head and shoulders pattern of a primary target X in the 30.09 area and a secondary harder to reach target X1 in the 30.87 area. What we had in a way to stop it was a congestion band between 29.58 to 29.65, containing the April 2019 high at 29.59 and the 50% Fibonacci line of the big old 2008 to 2022 move at 29.65. Plus further up the green middle time currently at 30.10 of the February to August bullish shift pitchfork, and then just over the 3,000 level, the July high at 30.22. Back in late August, these were enough to turn prices lower, especially I suspect the green middle time, all the way down to just below the long moving average, and the congestion generated during late July and August. However, once there, they, somewhat surprisingly, held, and we've since moved higher. Last week targets X and X1 were achieved and prices have moved higher still to now test what I suppose is the holy grail of this market in current terms, the purple neckline of the September to December 2022 reverse head and shoulders pattern. Now this could become a seminal moment, so watch carefully as prices have also formed another pattern, an early August to date bullish halfway hesitation that achieved its topside in the 30.60 area in the middle of last week, plus yet another pattern that is still operational. 2 weeks ago on this point I said the following, and I quote, "I've also drawn a new early August to early September bullish Andrews pitchfork highlighted in bright red in a renewed hope to show the bullish angle of attack of this market. We are right now just underneath the bright red middle time, currently at 30.86, end of quote. Well, this bright red bullish pitchfork is still operational and is doing a good job of showing the bullish angle of attack as prices today are utilizing the bright red middle time as a base for an attempt higher at the purple neckline. So what have we in the way beyond the purple neckline? Well, we have congestion at 32.01, then the June 2018 high at 32.20 and the April 2018 high at 33.02. But better resistance looks to be overhead between the 50% Fibonacci line of the March 2020 to March 22 move at 33.29 and the December 2022 high at 33.39. The question now is whether the market will falter here, much as it did in late May, or will it really go for that higher price? LME 3-month 10. Over April and May, the market formed a double top, Adam and Eve type, leading eventually to the creation over April to July of a triple top. It also clarified the April to July sideways triangle, which finally had a proper break lower in mid-July. The market followed on with a move down to the primary target, but not the secondary, harder to reach target. Likewise, for the triple top, prices reached down to the primary target, but not the secondary, harder to achieve target. Prices finally halted their slide down at the congestion between 28.835 to 29.005, containing the July 2011 high at 29.005, plus the important slowly rising long moving average currently at 30.10 and the nearby neckline extension of the October 23 to January 2024 reverse head and shoulders bottom, currently at 28,180. And finally, the 50% Fibonacci line of the March 2023 to April 2024 move at 27,330. All these slowed, stopped, and at the start of August turned prices higher. The pushback up in late July then became stuck in what I can best describe as an accidental congestion area overhead created by the combination of the medium moving average, currently at 32,150, short medium moving average, currently 31,370, the 50% Fibonacci line of the March 2020 to March 22 move at 31,845, plus the neckline of the thin and tall April base head and shoulders pattern. Yes, that one, the one I mentioned a lot back then, and that's currently at 31,850. Prices were stuck there, not for too long, and only till 2 weeks ago, when they broke higher, such that today the market has moved up over a previous all-time high from April 2011 at 33,610. Beyond this, we have the 50% Fibonacci line of the March to October 22 move at 34,175. This latter one seems to me to be a significant level, but we'll see. To help clarify this move higher, I drew 2 weeks ago a late July to early September bullish Andrews pitchfork highlighted in dark blue on my daily chart. The market is at the moment moving up towards the middle tie and above, currently at 34,610. Now looking further above, past the 50% Fibonacci line at 34,175, we have seemingly little in the way apart from the highs we saw earlier this year in May at 35,355, in July at 35,500, and of course in April at 36,050. However, I would like to point out one final feature, a pattern, a possible late July to date bullish halfway hesitation. A possible pattern, unlike the others, it is a possible pattern in the other metals, as it has not yet reached its target, which is in the 34,500 area. And that might be an interesting area to carefully watch.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.